So let's get us started on the YouTube side. All right, so now I can actually see the YouTube side as well. All right, we're gonna go ahead and get everything popping off. All right, I can see that there. All right, cool. All right. So welcome to Game Plan Sunday. Today is October 25th, 2020. We'll take a look at what occurred in the markets over the past week, what we noticed coming down the pipeline this week, how we can use that information to develop some strategies to make some money for this week. Okay, so I want to thank you guys for joining us here today, Wall Street Jack Boys. The past week, pretty interesting. The markets is actually down over the course of the week. Understand, gang, that the election is closer than ever. So the anticipation going into all of this is to be more volatility. So we expect to see a lot more volatility as we go into this election. We'll talk about it as we get more into this here. Again, this is the website, Wall Street Jack Boys, right on the news feed. Didn't have much that I covered over the week. Let's see. We talked about, let me see, Google. Google had the Department of Justice basically talking about regulating Google here. Interesting thing is that Google stocks is actually up. I think that's kind of a little weird. So we'll take a look at that. Netflix, we had earnings, and Netflix missed the earnings, but it actually wasn't a bad thing. It was, they grew, but they just didn't grow at the level that they were projecting to grow. So really wasn't a bad thing. It's just, positions buyers into a better position to pick up the stock at a better rate. And we have the employment numbers also. Again, it was pretty much a non-factor. We factor in the previous week and then the prior, the prior week with the revisions, with them revising numbers up and then revising numbers down. It pretty much netted out. And so when you take a look at the chart for the employment numbers, what you're looking at is basically, this line right here as it stagnates, goes sideways. And so we're really not seeing any action there. But interesting thing is, I think that what we have to pay attention to coming into this week here is that we have earnings. We got some big boys that's going to be having earnings this week. Okay, so we'll, I guess we could talk about some of those things. Actually, who's coming up for earnings? We have on Monday, we got F5 Networks, Hasbro, HCA Healthcare, Twilio. Tuesday, we got 3M, we got AMD, we got BP, Caterpillar, Eli Lilly. Who else? Microsoft is going to be big boy news right there on Tuesday. Pfizer, Novartis, Raytheon. So you got a whole bunch of, big boys on Tuesday. Is going to be a big day. On Wednesday, we have, let's see, ADP. We got Boeing. We got, eBay, Ford, GE, Gilead, MasterCard, Pinterest, ServiceNow, UPS, Ameriprise, Anthem, Amgen. So Wednesday is also going to be a big day as well. And Thursday, we're going to have Activision Blizzard. We're going to have, who else we got? Comcast, DuPont, Kraft Heinz, MGM Resorts, Sanofi and Twitter. Okay. And then Friday, we'll have a lighter note. We'll have Altria, Charter, Chevron, Exxon, Honeywell. And so those are some of the notable names that we expect coming in this week. So Tuesday, Wednesday, and Thursday is going to be the higher concentration of the big boys, where we'll get a lot more action. And my projection is I believe that these companies are actually going to do great. I think what the companies who already reported, I believe is over 80% of them have actually reported positive earnings. So I don't expect anything less from these companies coming up this week. So I think that earnings is actually going to be good. However, I think that what is going to cause the risk in the markets this week is the rise in the coronavirus cases. So COVID cases are spiking up, as we're seeing with the data here. I think reported Friday, they're talking about record numbers again, and so that's a concern. A third wave of COVID cases. I want to say over 80,000 as of Friday that was reported. and we're seeing numbers just going back up. And so that actually presents a risk factor to the markets itself, because, once the cases start back rising up, then you have more lockdowns. Well, the expectations is that the governments will be putting on more lockdowns. There'll be more shutdowns, more supply shock chain, more supply shocks to the supply chain. And so those are particular risks. Okay. Besides the election. Okay. And so I think we do have to keep our eyes open on that, the development of these COVID cases. They continue to spike, expect some more lockdowns. Now, interesting thing is that I've actually been out and about, and I've been noticing, this my own observation. I mean, out where I'm at, the kids out here just really don't give a damn. Okay. As I journey out late nights, and I've been seeing, I don't know, you guys let me know if y'all seen this, but I've seen, magnitudes of kids just hanging out, tailgate partying, just partying, out shirts off, laying on cars, what I mean? Groups of, maybe, 50 to 70 kids, I'm seeing in parking lots of like retail places, places that I guess maybe you wouldn't expect, anybody to be checking them, but I've been seeing that, and none of them had masks on. So that's interesting. Not too sure the causality of these spikes, but I just know, young people just don't give a damn. That's all I can see. And to be fair, okay, none of us, right? And I imagine all of us around the same age group, none of us have ever experienced a lockdown, right? We never experienced a lockdown. We had our freedom when we were young people coming up, from high school, going to college, that transitional phase. And, these kids, they're going through a time that none of us ever experienced. And so, trying to, be understandable of them, they don't want to be on lockdown. They when you're at that age, you want to mingle with other people, you're dating and you're trying to explore life. And that's kind of boring doing from home, and, trying to date people on the internet and all that. So I just think that, with lockdowns, you still have, the issue of trying to enforce it with the young kids. Older people are more precautious, but the younger ones, I don't know. I'm not seeing it, So I think that's an interesting perspective, just an observation that I had. Now, on another note here, taking us from the website, when we were in a chat, and again, here go the chat room right here on the website. If you guys not in there, we get it in. But some of the things in the chat, or I guess I won't even bring it up. But one of the things that happened this week was the crypto. Okay, so I normally don't talk much about crypto, but I got a friend who has a crypto group, and I've been, donating some of my tips to their work as well. Once I noticed that crypto started to behave towards my technicals, and so this was this is something that I charted a while back, and it's posted in their group, of course. What I was seeing here on my technicals was that with crypto, from the swing high here, from that, we had I got a projection up here at $1,400 target. So that was the target here. Now, as you can see, we got this, this target here that is up against and starting to move a little sideways. So we'll see if it hit that $1,400 target. So, $14,000 target at 1,400. No, this is Bitcoin. Okay. But Bitcoin had a big rally this week. We saw it in the group, in the chat room. It was posted. And one of the things is that you had, I believe it was PayPal, these digital companies looking to accept Bitcoin. And also, Fed Powell spoke and said that the Federal Reserve will consider digital currency. Actually, he said, in fact, I got the quote here. He says, "We do think it's more important to get it right than to be first." He says they're going to proceed cautiously on a digital currency. Now, you guys been here, Mark, Mia, Ron, Sid, y'all been here for a while. Y'all know I've been talking about this for the longest, right? So it's just the progression of where we're going at in society, right? This whole, cashless society, it is a dream for the central planners to be able to control society, and you can't control a natural society. Again, like I was saying, you got kids that's hanging out. They can't control them. They can just put things on, but you can't really monitor that. But in the digital world, you can see everything because everything is being computated. Okay, everything is computated. Everything is math, and we can track it. And so we can get things in a digital sense in the digital world. and the central government can get their hands on that, wow, you have control, complete control. This is the dream, okay? This is the dream of the socialists. And you people don't understand, the central planners is told it's all a part of that whole socialist society, which even people that's advocating for socialism don't even understand that this is the danger in this, is because it takes away your freedom, your autonomy, your natural rights, okay? And they manipulate this data, okay? When I jumped into data science, I thought it was really cool. I still think it's, pretty cool. It's really fascinating, but I start to learn more about human behavior. I start to learn more about the scientists and the, Silicon Valley. What they have in their hands is a lot of power. Okay. There was a podcast with Elon Musk and Joe Rogan when he was saying that we're already cyborgs, right? He was like, we're already cyborgs. You're an extension of your mobile device, right? You take your smartphone with you everywhere. It's tracking you. Every app that you have on your phone, you have to give it access to your microphone, access to your camera, access to your contact list and all this other crap, right? So, they monitor everything. Your GPS, everywhere you go, it's being tracked, it's being logged. Now you have this whole COVID, situation that pulls up and put lockdowns. And then they partner together with these tech companies, so these tech companies can facilitate the whole lockdown things for the government. So you have a government that's acting through private companies, right? Because they pressure them, they put them in, then constantly in hearings. If you go to C-SPAN, you can check them out, and they've been constantly under pressure from the central government to, hey, what are you doing about certain things, right? What are you doing about this, what are you doing about that? And they, we're doing this. We're going to stop political ads. We're going to do this, that, and third. And so what have you. So you have too much control. The power of the issue here is that what Silicon Valley has figured out is that they can recreate the whole natural world to this whole computer world, and they can have complete, total control. And there was a documentary that just came out on Facebook. Did any of you guys see it? I don't even know the name of it. One of my friends told me to go watch it. I went and go and watched it, but it was all about the guys who used to work at Facebook, the executives who started it. And they was talking about how the social media companies use the technology to steer society. And it was, they were saying how it's totally a violation of your human rights, because you actually don't even know what you're actually doing. Is not even freedom of your action. Is actually being, coerced, is being manipulated and steered to certain things, your ideologies, things that you like. But there's a documentary on, I think it's on, it's on Netflix. My friend told me, I don't know if you guys seen it. If you've seen it, drop it in the chat, because it's a really good one. You guys should really, really watch it. But these tech companies, and again, this is, you got Google that's under investigation right now, for it. And it was talking about, there was this guy who's Dr. Robert Epstein. Yeah, he's, this guy, he's a freaking doctor. He got all this data, doing his data science stuff. And he's basically had all the empirical evidence to show and prove that they controlled the elections. And he's showing that they, and again, this guy, he voted for Hillary. He's a liberal Democrat, but he came out and he was saying that, Google actually steered 2.6 million votes her way. And he's like, how in the world can they do that? This stuff is really deep. It's really a whole lot of deep stuff about psychology, how the human brain works, stimulations, neurons, all this stuff. When I was doing machine learning algorithm stuff, it's really fascinating stuff. Okay. So these guys they're the big boys. They know how to do it. They, again, everything that's in these apps and these phones is designed to trigger stimulants in your brain to get you to do things. Whether it's a like button, a heart button, they suggest you certain things, and it's like you're a big, you're like a rat in a maze here. So this is really dangerous, because this is what central planners love to get their hands on. So that brings me into, the whole digital currency thing, which plays along with that. Your money is being tracked every which way, and so that's a dangerous thing as well. So that takes away your freedom, really. So not to get too much onto that. The social dilemma, I believe that's what it is called, the social dilemma. So yeah, make sure y'all check that out if y'all haven't checked that out. Really interesting. You start to see the truth about what's happening, and you start to really question yourself, or why you have the beliefs that you actually have. Are your beliefs truly your own, or have those been have you seen the movie Inception? You know, it's a really good movie, Inception. They put a thought into your brain and, you know, put a seed in there, and then it grows and manifests on itself. But you have to take a look at stuff like that. So I want to bring that to attention because the Federal Reserve is already talking about moving into this digital currency, Bitcoin. You know, of course, the crypto communities, they're rallying. Now, what he did say is like he's not looking to compete. They don't want to look to be the first. They want to make the best. Now, I've been talking about this since last year. They were already working on it. I think it was working with JP Morgan and Goldman Sachs, the big banks, about getting this thing together, because the problem with the cryptocurrency is that it's not stable enough to use as a pricing mechanism or for money. It's a medium of exchange, but it's not actually money because it's just too crazy. It's not stable enough. And there are issues that they need to get it stable. And so I think that's what they're working on, figuring out a way to get the cryptocurrency that can be stable. And then again, enact force for citizens to use it. One thing that Bitcoin is supposed to be the people's money, has no central authority, has good intentions. But when you have a central government that moves into this place, like you have China who's launched their digital renminbi, you know, these guys are looking for control. Government is looking for control. And that's a dangerous thing. And they can force its citizens to use whatever currency they enforce, and they can ban currency. So they can ban cryptocurrency. They could ban, you know, excuse me, not crypto, but Bitcoin and all these other ones, and they can force the citizens to use theirs. So that's why, you know, my warning to the crypto community is to, you know, to be, you know, aware of that as a risk. Okay. Right now, just taking a look at gold and silver for you guys. I know you're going to ask about it. So gold and silver are still chopping around, and gold and silver is still chopping around. It still has not, this double bottom setup that I was looking forward to still has not came through yet, because price is still up here. Let me move here. Price is still up here. So in order for this thing to kind of take place, it's got to bounce back down here. So that's what I'm pretty much looking forward to. If, you know, gold comes back down here, stabilizes before it comes back up. So that will signal a buy point. So right now, still not seeing a buy trigger here at all. In fact, we're seeing a little more pressure. And my anticipation here, again, projection is that it'll come about right here. Now, remember, right now is the craziest part of trading because of all the volatility that's coming in. So we don't want to be heroes in this. You know, you want to tread softly. You know, the rewards, you know, because the risk is higher, the rewards are bigger. So you get some big, you know, some big boy, you know, bang outs. But it's going to be a little more trickier trying to do the swings, though. Okay, so because anything can go, and there's not too much statistical, anything math related that, you know, can indicate to us truth that something is going to do this, that, or third. I think the statistics, you kind of throw them out the door at this point. But, you know, it is our barometer. It's our God. It's what we use. Okay, but just you got to have your, you know, you got to have your common sense on at the same time, right? And I don't know how to, you know, to quantify that. You can't quantify that, right? But that's something interesting. You can see the same thing over in silver. You know, it's something pretty nice. Squeeze in here. You know, we'll see if silver gets some more pressure down to the 100 moving average. And the key is if we get down back to the 100 moving average, then that will definitely, you know, signal, you know, another buy point. Okay, so again, you know, if you're still holding, you're still good. Remember, you know, we got in right down here, and everything is all gains from up here. I mean, even if it falls all the way down here, I'm pretty sure it won't fall beyond this. Okay, this is the biggest floor here. This is a floor here. This is the biggest floor, but you're still positive either way. Any of these would be, again, this is a more desirable buy point. Okay, these two zones. So, you know, that's my take on those. Let's take a look at the broader indexes. All right, so we got the S&P 500 right here. You know, it's at a you know, it's at a point where it never got back up to this high here. You know, it never, you know, breached this high. It came back up pretty strong, you know, before last week, but it got rejected right up here. I'm seeing it, you know, chop right up in here. We could see this come back up, form something looking like a cup and handle situation, or it could come back down. Now, one of the biggest factors that's been weighing on the markets has been this whole stimulus, anticipation of stimulus. And so we haven't gotten the stimulus. And so you see gold is still, chopping around, and it's starting to go down now because there's no stimulus. The catalyst for gold is stimulus, money printing, more money, then gold is going to shoot up. So we haven't gotten that. And that's the reason why you've seen gold and silver come down near this floor that it's at. And also S&P 500 is a little tricky because the markets has been anticipating this stimulus also because they're the beneficiaries of the stimulus, right? And we haven't gotten that, but we have good earnings. So the earnings are looking pretty good for these companies right now. And so you're getting more of a choppiness, you know what I'm saying? The uncertainty of stimulus. We didn't get the stimulus. I think Nancy Pelosi and Steve Mnuchin, there was, continuing talks. They had a deadline last week. It didn't go through, but they're still, having this talk. And because this talk is still out there, it's still got people on the edge about it. But it looks like we're not going to get one until after the election, which, I think that Wall Street, again, we talked about, the election last week, but Wall Street has their chips on a Biden presidency. And that's interesting because you say, well, Trump has given you guys all these tax cuts, blah, blah, blah. But you got to understand, right? If we take a look at the, let's go to the VIX real quick. All right, so we'll take a look at in fact, let me go to just the index VIX. No, I got a lot of lines on here, gang. I'll be looking at a lot of stuff. All right, so let's just take it back. All right, election times. Okay, you got this VIX up in here, and you see these spikes. VIX, the way the VIX normally works, man, it pops up and then it comes back down. It's kind of like snap back, but you get those crazy pops. And let's see here. Okay. So when you got into, the election times, look at the pops in here, right? And we're coming back up. Now, the VIX, if we take a look, so I got this moving average up here, this 200. The VIX itself is actually above that zone. So when it's above that 200, that means that the VIX is pretty high, okay? So this is VIX. Volatility is pretty strong. When Trump came into the White House, I call him the volatility king because Trump brought with him the volatility. All right, so he had all this volatility. The VIX started waking back up. It was asleep for a while, and Trump came in and woke it up. Now, Trump woke up the VIX. The volatility is because his plans, everything he's been doing has been, basically against some of the, I would say the money-making principles that these companies have been able to capitalize on, in particular with China, with cheap products and also offshoring and exporting, offshoring jobs into these other countries. And Trump has this nationalist state of mind, and it's like, hey, America's first, American this, that, and third. And before it was, these companies didn't have the regulations and the tariffs that Trump has put on, because Trump's idea is to basically force these companies into submission so they bring commerce back to America, bring jobs back to Americans. And so his attack against China has actually caused casualties. So casualties, meaning that, that's a part of his plan, right? So I'm gonna tax you to death until you bring your business back to America, because Americans need these jobs. And so that type of policy has been definitely, it caused a lot of volatility in the markets, basically. And basically with a Biden victory, I believe that what Wall Street is seeing is that mentality will go away. Biden is going to be more cooperative, probably take away those tariffs against China and what have you. And those companies will be able to get their margins down, right? Because the cost of the goods will be cheaper. And so I believe that although Biden has this higher tax plan, he's going to tax the hell out of them. But I believe that they've already figured out and, computed that they will make it back if they can get these, products and goods much cheaper because, with Trump moving his policy the way he has, it's been a little more inflationary to these companies. So he's helped them out in the tax side of things, but then he also cut them on the cost of production, cost of production and cost of labor. And so that's an interesting thing. Now, we talked earlier about the, these technology companies, Silicon Valley. Trump's nationalist plans have also negatively impacted Silicon Valley. When you take a look at Silicon Valley, right? When you take a look at these tech companies, who are the people that you normally see that work for these companies, right? It's normally, immigrants, foreigners, right? They're normally from India, China, Middle East somewhere. And their populations, are, their people are driven in technology, and so Google, Facebook, Elon Musk, whoever, all these technology people, that is their grounds for their recruiting. Okay, so they can get the best brains to come work for their companies. But when Trump closes off the borders, this negatively impacts them because now they got to try to get the talent from here in the U.S. And in the U.S., you have kids that don't want to go to school for STEM programs. They want to go to school for art, or they want to do whatever they want to do. So you have a talent pool that's probably of less quality. And so they have been negatively impacted in that regards. Now, Trump has been more lenient with them as far as, restricting them. But, they are definitely at a direct attack against Trump for that. They want to open things up. And with technology, I was showing you guys how with technology, how they control and social engineer. Well, you got to think under more of a socialist economy. These companies like your Amazons and your Google, right? These guys are going to be, they're going to be the direct beneficiaries of those policies because the socialist environment, they pick and choose the winners and losers. So you have big companies that, they basically take over, monopolize, right? And the smaller companies go away. Right? You see right now we have with lockdowns, a lot of small companies are, have been destroyed basically. Meanwhile, look at these companies, Amazon and Walmart and all of them, they're doing record numbers, right? And so those are things you got to keep in mind too. Also keep in mind is that I was actually reading some reports about the supply chain shocks coming up for the holiday season. So it's the end of October, gang. We got one more game plan Sunday, which is next Sunday before the election. Once we get the election out the way, which the volatility is still going to be hanging around because we'll talk about that a little later. So I'll get into that. But basically what I was seeing is that they were saying that a lot of people, we saw the panic buying beginning of the year. They don't expect panic buying of that level, but they are expecting, panic buying to pick up. And they believe that businesses are more prepared this time. But the problem is you have less businesses. So because you have less business, you have less options. So you have people that funnel in one location or, fewer locations than otherwise they would have if you had other businesses. And so, you get those, those products getting pulled off the shelves much, much faster. And, you may see, again, under, Biden president, price controls and all this other stuff, you're definitely going to get that. Lockdowns, restrict the flow. And so we're seeing people starting to prepare again. So to me, I believe that that's a warning for you guys also to get into that preparation mode again, because we're seeing the COVID cases spike up again. Because again, those COVID cases are spiking up, over 80,000 on Friday reported. Seeing those cases coming back up, anticipation is that you can see more lockdowns will come back. Or even where I'm at, we were moving through phases and then they halted the phases. They may go back phases. I know the governor was talking about having the police to enforce it. People were asking him about, what are you doing about the police enforcing things? And he was saying how some police are, basically saying that they enforce it around different counties and others are not. A lot of police do not want to enforce it. It's like, it's not worth their time. And as I was mentioning, these past weeks, I've been seeing kids having tailgate parties, 50 to 70 people, in a parking lot at a time, and no police, nobody's bothering, nobody's, doing anything. I believe we're going to see that start to change as these cases pick up and fear comes back into the headlines and people start to get scared again. And so I think that some of the things that you have to prepare for is that. So get your things. I ain't gonna say just hoard or whatever, but definitely survival first. So make sure you stock up on your basic commodities here. And so but that's what I see with that. But those are pretty much, I think, most of the main headlines that I have for this week coming in. Let's take a look at some stocks that's moving. Taking a look at the sectors this week. The communication sector, although the markets was down, the communication sector was actually looking pretty good. This is XLC. This is pretty bullish. I got one of my pink dot squeezes on this thing right now in the buy trigger, up against a little resistance right up here. I definitely want to see if this thing is going to pop up. But overall, I'm pretty bullish on this. We can pull up. Let's see. Let's go to my communications sector. Okay, bingo. So in here, we can actually, let's just arrange that. All right, cool. You can see how Google, again, although they are under pressure, their stock was still looking phenomenal, right? All right, so you got Google that's still looking phenomenal up in there. You have Spotify. Let me actually just show you guys what I'm looking at. Here's the watch list right here. So the watch list is over here. Look at all that green. The markets are down, but this is where the money was at, right? And although Netflix had a down, earnings, it actually wasn't really negative. I mean, what do you expect, right? The economy's in a recession, and they are basically, they didn't hit their target, but they actually did gain over 2 million subscribers. So it was still, still good, right? Anyway, Pinterest, these companies are all, pretty much looking good. So this sector was pretty good. This stock, Joy, is in a squeeze here. So I think this is a place of interest. You can see it, come down to this floor right here, the 100 moving average. Got a little buy trigger right up in here. Buy trigger on the stochastic side. Squeeze this right here. Trend is starting to move up. So approaching this here with a bullish bias. Okay. I think we can get up to at least to this $90 target. All right. So yeah, again, I like the communication sector. I think it's doing pretty good. What else? I think Starbucks is actually looking pretty good as well. Starbucks is pretty much, let's see, pretty much a stone's throw away from its last high. I think it's too close to not hit that high. And so I believe that we can actually bust through that, get to about $95 target right up here. And so I do like Starbucks to the long side as well. Okay. Now, if you get these lockdowns here, I don't think that'll be good. But other than that, I think they're good. And they have earnings coming up also. Let's see. I believe it's on the 29th. Yeah. So I think this can play pretty nicely up into earnings. All right. And what else? I don't really think I have anything else left on my agenda here that I've been able to look at. So with that, I'll take a couple from you guys. Anything y'all want to take a look at, we'll take a look at. Drop your tickers in the chat. We'll take a look at them. XLP, this hasn't really done much. XLY hasn't really done much. Actually, XLY like it's trying to come back. So this is your consumer discretionary. All right. So you'll get, again, those retailers we're talking about, like they're starting to try to come back up. Just right here. So the key thing is see if this picks back up. If it picks back up, then you're coming back up to that target about 160. Okay. And again, that's the holiday season, people shopping. You got Thanksgiving around the corner, Now, I think you have smaller Thanksgiving feasts and things like that with the lockdowns. So I think it still might be a little tricky, companies' expectations that they're going to make a lot of money, I think people are still going to celebrate the holidays. They may have smaller gatherings. So So I still anticipate that people are going to buy a lot of food and stuff like that, coming up into these holidays. And I think that we'll probably get the stimulus after the election. If Joe Biden actually takes, the presidency, the Democrats are going to have a much bigger stimulus than Trump anyway. So I think that's another thing that Wall Street is looking at. More stimulus, it lines their pockets up. They're going to be the beneficiaries of it either way. And so it's going to be interesting going into this election. So it's a lot that's at stake. But the key way to prepare for this is to take a look at companies that are, positively Trump impacted, positively Biden impacted, which would be the, energy companies that Trump, they're going to, rally under a Trump presidency, reelection, defense, right? So you take a look at, the defense sector, the defense stocks. Trump is a big military spender. He is, he's done a lot for the military. He's going to continue to do a lot for the military. This is the XAR sector. So you'll find stocks like the Lockheed Martin, the Northrop Grumman, those type of stocks are really going to benefit. If it's a Biden presidency, to prepare yourself for that, you want to look at the clean energy companies, like the, solar stocks, even like Tesla fits under there. And then you probably see some of these energy companies start to switch over to more clean energy also. So I think that, because the Democrats run on a big climate change platform. So that's the way that you pretty much, look at those and to prepare. All right. So this is a Dollar Tree. Ron B has this popping. This is interesting on Dollar Tree. Just taking a look at it, just a quick, look here. If we take let me see. Just taking a look here. First glance to me, looks like it's trying to form a head and shoulders here. Not too sure how to make this out, but that's the way that pattern will play out. Now, this could be a flag that could take it further. So you can play this, two different ways. Dollar Tree is actually, the stock itself is still bullish though. So it's still above the candlesticks right up in here. And so the way I will actually look at it is my bias on this would be more bullish than the head and shoulders, we'll see. But, through the pandemic, people are trying to save money, trying to shop cheaper. I believe that people are shopping cheaper now. And people will go more to try to, shop at Dollar Tree. So as of right now, that's where I'm looking at it. But if it breaks out of this and you see it comes out, if you did take a position, your risk right down here, or actually right here, you see it come down here, just, cancel it. But yeah, so I like that, for that. My man on the YouTube side, utilities. So utilities had a good run of the past 2 weeks, again, with bonds normally being the safety, place of safety where money moves to, with volatility. We saw bonds actually selling off, yields rising, prices going down. And the proxy to that has been utility. So utilities actually been doing pretty well. And bonds have made the opposite move like this. And we could take a look at it, but you see utilities are still up there. And it's coming up against the 786. And it is extended. So my belief is that, the momentum is shifting down, is that, we trade more sideways on here up against this resistance at 786 because it had a good, about 2-3 weeks of rallying, which is, that was the time to play that, which was the reversal of what we saw happen in the bonds, which is, TLT. What you see, the bonds is coming down. It's now traded underneath the 200 moving average. So bond prices go down, yields go up. So we've been seeing price come down on the bonds, right? It is now broken underneath this 200 moving average, which is bearish. So that's my take on that. Anything else you guys want to take a look at? All right. If not, again, make sure you guys check out the website, WashingJackBoys.com. Make sure you register. again, this week, don't be a hero. We got a lot of volatility that's in play. So don't try to be a hero. And I'm not trying to be a hero either, because, it is very uncertain. So, just keep that in mind. So don't be a hero. But this election is really going to be crazy. We have a lot of mail-in ballots and things like that this year. We have a system that is pretty slow at trying to compute those things. So they're saying that even once the numbers come in, it's going to take them a while for us to even figure out who's going to be the president, from my understanding. And I think what's dangerous is that you have a lot of emotion going into this election. It's a lot that's at stake. And with the Trump victory against Hillary, we saw a lot of emotion coming out. It was crazy. This is going to probably be 2 times worse, whether Trump win or Biden win. So you've seen a lot of people, record numbers of people buying guns and ammo. People are preparing for the worst. I'm not here to tell you what to do, but just telling you this is what we've seen through the data, is that people have been preparing, and they are preparing. And so, you don't want to get left behind. You may want to prepare. I don't know the outcome of it, but people are going to be crazy. If Trump loses, he is not going down without a battle. He is going to put up the biggest fight you've ever seen about a rigged election. And so I think that the volatility will, persist for the whole year, actually. So let's keep that in mind. Trump is an underdog right now. He was an underdog with Hillary also, but I think he's even more underdog right now. So just factor that in. The risk is going to be crazy. Make sure you're prepared. All right. With that being said, we'll catch up in the markets this week. Appreciate you guys. Y'all have a good one. Peace.